Today is April 1st, 2016, and this is the ADM Investor Services Weekly Market Review. Happy Friday to you both.
Same to you, Erin.
Same to you.
Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Greg Groh, Director of AgriBusiness at Archer Financial Services. Greg, we'll start with you. The USDA 2016 acreage intentions were released yesterday, March 31st. Were there any surprises?
Well, yes, Erin, there was a big surprise in corn acres. The numbers came in 3 to 4 million above even the high end of trade expectations, implying that farmers choose corn as a least loss alternative, considering other options available for planting this spring. We saw barley acres, wheat acres, winter wheat acres, spring wheat acres, all lower than last year, but a pretty big surge in corn acres, which was a bit of a shock to the market.
Okay, for the upcoming spring and summer months, what are traders talking about and how could it impact the markets?
Well, now that we're through the acreage report, we now tend to focus mostly on weather. First, it's planting weather here as we begin in earnest during the month of April. And so the focus now shifts away from USDA reports directly to weather, expectations of weather, and how things play out. We can certainly see these acreage numbers from yesterday shift, especially if we have a wet spring in parts of the Corn Belt. And currently the overly wet conditions in the Delta regions cause us a little bit of concern. It's getting a little bit late now for corn, and it may cause some shifting of corn acres back towards beans in that region if it stays wet there.
And finally, speaking global economics, what forces here will impact crop prices in the coming year?
Well, you know, we've come off of 2 big years of crops. Both North American and South American supplies have been very large. Yields have been very strong. So we're dealing with surpluses around the globe. So we need some demand. We need some of the fears in the global economy to begin to abate. We need the U.S. dollar to maybe weaken a little bit. Whether these things are true, time will tell. But we need now to see some demand improvement because we have a lot of surplus commodities in general to deal with right now.
Interesting. Great. Thank you, Greg. Alan, on to financial markets. Last week, 4 Federal Reserve spokesmen made hawkish interest rate comments. 2 of them implied there could be a rate increase at the April meeting. How do you reconcile this Tuesday's very dovish speech from Fed Chair Yellen?
Okay, well, there apparently is quite a division within the FOMC. Some Fed representatives are becoming more hawkish, while Yellen has become very dovish and has been for quite some time. So the possibility of a rate increase at the April meeting is rather hard to believe. In fact, financial futures markets are only predicting that the Fed will raise at the April meeting with a 6% probability. So our feeling is when there are spokesmen from the Fed, you concentrate on what the chairman, or in this case the chairwoman, has to say and put more emphasis on that and quite a bit less on what the various Fed bank presidents and governors have indicated.
Okay, great. The British pound recently has underperformed in the news. Could this be a sign of weakness?
It absolutely is. What's really going on there is traders are becoming more and more centered on the possibility that the UK could leave the European Union, and there is a referendum to determine that issue scheduled for June 23rd. So anytime there's this type of political uncertainties, that often is a negative for that currency. So we believe that the pound is likely to be the weakest performer of all of the major currencies, and I could see a move down from the current 142 area possibly to as low as 132 in advance of that referendum.
Interesting. This week, the S&P 500 futures and Dow futures advanced to new highs for the year. What do you think the outlook for stock index futures is now?
Okay, well, first of all, this recovery in the last month has been very dramatic, especially after the poor performance we've had over the prior 3 months. So our feeling is that as long as interest rates globally stay low and that the Fed only raises 1 time, which is our prediction, that they'll raise just 1 time this year, that rates globally are low enough to sustain a bull market. So we are anticipating that stock indices will continue to advance for this entire year.
Okay, great. Well, again, Alan and Greg, thank you very much for taking the time. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of Archer Financial Services, ADM Investor Services, or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.